Hello and welcome to Free Expression from the opinion page of the Wall Street Journal. I'm Gerry Baker, editor-at-large of the Journal. Thanks for joining us. And if you're not already subscribing to Free Expression, please make sure you do at Apple Podcasts or Spotify, wherever you do your listening.
From the opinion pages of the Wall Street Journal, this is Free Expression with Gerry Baker.
This week, we're going to talk about the economy. In particular, we're going to talk about supply-side economics. Taken a bit of a hit politically, should we say, in the last few years. Supply-side economics was the kind of defining feature of conservative, right-leaning economic policy over the last 40 or so years, led by, particularly first of all, by Margaret Thatcher, in policy terms, by Margaret Thatcher in Britain, who came to power in 1979. The principle of cutting taxes, encouraging growth through letting people keep more of their money, cutting government spending, cutting regulation, promoting free trade, promoting free markets. And of course, here in the United States, Ronald Reagan, elected in 1980, similar approach based on the similar principles: cutting spending, cutting taxes, promoting free markets at home and abroad, and unleashing the animal spirits of capitalism and achieving growth and prosperity that way. And again, that's been, for 3 or 4 decades, the defining feature of conservatives around the world, not just in the UK and the US, but in other countries which have campaigned and which have campaigned on a conservative platform, have of course been pushing the case for supply-side economics and all of the benefits that it appears to have achieved. But of course, in the last decade, it's fair to say supply-side economics has come under serious challenge. It's always been rejected by the left, if you like, by progressives who always said, no, we needed more regulation to rein in some of the more aggressive predatory behavior of capitalism. We need more government spending to provide a higher safety net for people. We need more higher taxes to pay for that spending, but also to make the system fairer, to encourage people. Yes, to incentivize people, but also to ensure that there's money available for the people who are disadvantaged. So the left have always taken that view. Most interestingly, obviously, in the last 10 years has been the evolving debate on the right. Shall we say there's been a very small, but fairly vocal kind of right-wing, if you like, conservative view, which has been critical of supply-side economics, says that it underestimates some of the kind of, if you like, the costs of supply-side economics in terms of, especially when you look at trade or deregulation, some of the things it may do to domestic industry, to manufacturing here, to business here in the United States, to employment in the United States. And of course, it's come under significant challenge from none other than Donald Trump, who, whatever else he is not clearly a believer in the pure economic, shall we say, of Ronald Reagan and Margaret Thatcher from 50 years ago. He has most obviously and most strikingly a firm believer in restrictions on international trade through tariffs, themselves, of course, a tax. He believes in putting up taxes there. He believes in significant government intervention in the economy, taking stakes in companies, telling companies what they should be doing, how they should be behaving. Opposed, obviously, to the free movement of people, as well as a significant amount of free movement of trade, very significant restrictions on migration. This represents something of a revolt. I think it's fair to say Trumpian economics is a kind of a hybrid of traditional supply-side economics. We've seen, obviously, a huge tax cut again this time around. And businesses have certainly clearly benefited from that, as have individuals. But again, you see this pretty significant constraint on supply-side economics. And Trump himself is very singular, very particular. But again, that is becoming the idea of a populist approach, if you like, to the economy, not just again here in the United States, but you're seeing it also to some extent in conservative movements around the world. In Europe in particular, these populist parties are not only arguing over issues like immigration and making the case for national sovereignty, as Trump has done here, but on economics, many of them are arguing actually for a more aggressive government role in the economy and for more intervention in the sort of populist way. So where is supply-side economics? Does it still really work? And can it be made to improve the economic performance in countries around the world, in the United States and elsewhere? And so we're going to look at that, the principles of supply-side economics. We're going to look at particularly through the through the lens of Britain, the British economy, which to some extent has been a bit of a test case for rejecting supply-side economics over the last few years. Government spending has increased dramatically. Taxation has increased dramatically. Britain went for Brexit when it voted 9 years ago, even before Donald Trump was elected. Brexit obviously involved Britain leaving the European Union and imposing all kinds of trade and migration and other barriers. So Britain has been almost a sort of a little petri dish for the kind of the anti-supply side case over the last few years. And to be honest, it hasn't gone very well. Britain's economic performance has been very, very poor. So we're going to look at that. We're going to look at the principles of supply-side economics, how Britain in particular has fared with them, and what lessons that may have more broadly for the economic debate here in the United States. And to do that, I'm delighted to be joined this week by Matthew Elliott. Matthew Elliott is Baron Elliott of Micklefell. He's a member of the House of Lords. He's a political consultant, political strategist. He was very much, interestingly, a leading figure in the campaign for Britain to leave the European. He was the chief executive of the Leave campaign, as it was called back in 2016, and still strongly supports the idea of an independent United Kingdom outside the EU, but also is the co-author of a new book, which is a rallying cry, a reassertion of the values and principles of supply-side economics. It's called Prosperity Through Growth: Boosting Living Standards in an Age of Autocracy and AI. And again, so we're going to talk about supply-side economics. We'll also talk about Brexit, get a sense of how Brexit has gone for Britain in the last few years, whether or not it's been a success, and get a sense of what lessons, again, Britain may have for the United States. So Matthew Elliott, Lord Elliott of Micklefell, thanks very much indeed for joining Free Expression.
Thank you for having me.
Well, it's a fascinating book, as I said in the introduction. It's a real rallying cry, a kind of a reassertion of the values and the ideas of supply-side economics. Supply-side economics has kind of pretty much led the conservative thinking about the economy here in the United States for a long time. But I think it's also fair to say that it's been under something of a challenge in the last few years from all sides, actually, people questioning whether or not it's continues to be relevant, whether or not the challenges of the modern economy are really the kind of challenges that it can address. Donald Trump, of course, has this, if you like, sort of odd hybrid between some traditional supply side stuff on tax cuts, but also very much a believer in a big role for government, taxes through tariffs, intervention in the economy, direct intervention in the economy. So tell us what I know the book is addressed for a British audience, but in this, as we start off here, tell us what supply side economics is. Tell us about the principles, and indeed, actually, ultimately, why you and your co-authors, which include Arthur Laffer, of course,
yes.
why you wrote this book.
So, big picture, we wrote it because we felt the UK needs to get back to a more supply side approach to running the economy, and just some sort of broad figures, if I may start off with. If you go back to the year 2000, UK economic growth was 3%. Taxation was 33% of GDP. We were paying off the national debt. The budget was in surplus. Things were going extremely well. And that was basically based on the 1980s, the foundations laid down by Margaret Thatcher, and also the fact that Tony Blair in his first term in office basically continued the fiscal plans of the Conservatives from the sort of mid-1990s. So a very solid foundation led to good economic growth. Now, post the financial crisis, which seems to be very different, around the time of 2007, if you look at the UK GDP per capita compared to US GDP per capita, the US was about 10% ahead. Now, you're 40% ahead. So we've got a serious problem with the UK. We're poorer, we're stagnating. And actually, if you look at the forecasts going forward, we actually asked some economic forecasters to do this for us for the book. They predicted that if we just allowed things to roll as they are at the moment, that by 2030, the UK will be overtaken by Lithuania. By 2034, we'll be overtaken by Poland. And by 2043, be overtaken by Turkey in terms of GDP per capita. So that's the track we're on at the moment if we don't go back to some of these basic principles of supply-side economics, or as we call it in the book, the North Star of economic growth.
let's talk about these economic principles, and in particular what Arthur Laffer famously called the sort of five principal values, the five kingdoms of supply-side economics. Let's first of all tell us what they are, and let's go through them, and we'll see, again, not necessarily exclusively in a British context right now, but more generally, we'll see how relevant they still are to to the challenges of the modern economy. So let's go through those five principles one by one.
So this is the first time that Arthur Laffer has ever actually looked at the economy overall in terms of growth and applied to a country, but just broad principles. He said there are five kingdoms of economics: taxation, spending, regulation, sound money, and trade. And you basically need low taxes, low and fairly distributed taxes. You need, on spending, low spending. You can't have high spending, much higher than taxation. You need sound money. That's really important as well. You need sort of smart regulation, not over-regulation. And you need international trade. Those are the five kingdoms that he talked about in the book. I went into great detail of economic history, both in the UK, US, and internationally, to show that when countries follow these principles, that's when they get the highest growth rates.
So let's go through them one by one. So taxes now is the first one. Again, that has been a long-standing principle of conservative economics. Arthur Laffer famously gave us the Laffer curve back in the 70s, 80s, pointing out that when a government cuts tax, especially when tax rates are at a particularly high level, it actually has the positive effect on revenue, sort of slightly counterintuitively to what people think, because it encourages more growth. It results in more revenue for the government. Again, let's not focus on Britain right now, but more generally, do you think what's happened everywhere in the world over the last 40 years since Arthur Laffer, first sort of famously laid that out, is pretty well everywhere the size of government has grown, and the tax take overall has grown? Obviously, it's true in the UK. It's true here in the US. Federal tax revenues overall as a percentage of GDP are not much change, but local, state, and local taxes. How much do you think they're then, in that broad context of the relative economic weakness that we've seen, because again, growth rates, even here in the US, you're right, the US has grown faster than the UK over the last 15 years, but by the standards of the 1980s and 90s, the US is not growing as fast as it is. How important is the fact that the overall tax take has risen? How much has that been a restraint on growth, do you think?
I think it's been a huge restraint. And again, if you look at the US, if you look at the tax rates in different states, you often see investors and entrepreneurs and high net worth individuals moving from state to state to state, depending on basically where the best tax rates are for their business. So people are very familiar with people moving from California over to Texas and Florida. What you're now starting to see, and this has perhaps really been exacerbated since COVID, and since people are actually recognising and actually being more mobile in their approach, you're seeing a big outflow of people from the UK. Some 60,500 multimillionaires leaving the UK in this year alone. So actually we're seeing a big factor. If you look at the back to the early 2000s, Tony Blair, one of the smart things he did when he came into office was actually really incentivise entrepreneurship, and had taper relief and low rates of capital gains tax. And that led to actually a sort of mini boom, if you like, in terms of entrepreneurship within the UK. Now, if you look at rates of capital gains tax, they're really horrifically bad within the UK, putting off that entrepreneurship, putting off that investment, and actually driving people overseas. And as it becomes easier for investors and entrepreneurs to move overseas, you see more of that within the UK context. And also, of course, with the high tax rates. There's another one with a personal level within the UK. There's a very high marginal tax rate when it comes to earning more than £100,000 a year. And again, it's just stifling that natural urge to bet yourselves, to earn more, to work harder. That's been stifled by high tax rates.
Let's talk about the second kingdom, which is spending, and let's relate the two actually, because what the thing that's particularly on my mind is, of course, deficits, right? I mean, one of the things that deficits and debt we've seen in the last. Now, a lot of it's been accelerated by COVID, obviously, as we saw, but it was been on track for a long time now. The US and the UK now have very similar sort of debt to GDP ratios, around about 100%, slightly more than 100% of GDP. Even 10, 15 years ago, Matthew, we would think that was just unsustainable, impossible. The sort of consensus economic thinking some time ago was 60% of GDP for public debt was probably sustainable and okay, and depending on growth rates and everything else, and obviously interest rates. But we're now much, much higher than that, and obviously part of that is that we have held taxes relatively low. I mean, again, as I said in the first part, taxes have gone up, but spending has increased dramatically. And part of the theory was the starve the beast theory, right? That if you cut taxes, that was the first thing you did. That would force governments to cut spending because they wouldn't be able to tolerate higher deficits. Well, what's happened is we've cut taxes here in the US, particularly recently, in the last 10 years. Spending hasn't really come down at all. So what we have is a lower tax base and higher spending, and therefore, despite the Laffer curve, it hasn't been as effective as perhaps some might have thought. We've got significant deficits, and you've got the same in the UK. Is further tax cutting without really aggressive spending cuts really a plausible way to go for these economies?
Well, that's not what we're advocating, but you can't have a situation like we have in the UK, where you have spending of 45% of GDP and taxation of 37% of GDP. You can sort of get away with that. We did for a long time when interest rates are very, very low. And that's why, in a sense, for a long time, the whole sort of, Thomas Piketty, his famous book Capital, and the whole sort of modern monetary theory, School of Economics, was so popular. You could seem to sort of get away with that and sort of shaking that magic money tree, if you like, to get higher spending. But now interest rates are much higher. The ability of particularly a government like the UK government to be able to borrow consistently, month on month, year on year, huge sums of money isn't the case. It just can't continue like that. In a sense, in the US, you can slightly get away with that a little bit more because, of course, the dollar is a reserve currency. So you've got more scope for that and a much bigger economy. But within a UK context, we're spending so much on debt interest repayments for the government. It's just getting too much.
Well, you're not just alone in Europe or indeed around the world in that. European governments across the continent have also seen very significant increases in debt. France right now is frankly in what seem to be like the early throes of a fairly serious debt crisis. Germany's in slightly better shape, but other countries are in real fiscal, are facing real fiscal challenges. How serious do you think that the crisis? I'm begging the question there, but how serious do you think the challenge is? And is it, are we looking at another, as we had in 2010, 2011, are we looking at another kind of Europe-wide fiscal debt crisis?
I think we are looking at a debt crisis, yes. And I hope the government does a sensible thing and actually tries to address this before it becomes a major issue and a proper crisis. Of course, back in the 1970s in the UK, we had to go to the IMF to get a bailout. It feels like we're sort of approaching similar territory with the UK economy, where we're not just the sort of sick man of Europe. The whole of Europe is now a sick man when it comes to the world economy. And far better for the government to get ahead of the curve and, like you were saying, trying to actually address the spending side of things. It can't do tax cuts alone, but look at some sensible spending plans. What we suggest in the book, for example, is just saying, look, let's go back to where welfare was in 2019, before COVID, before the big spike in terms of welfare claimants in the UK, and let's freeze it in those terms for the time being. That would be a sensible thing to do. If you look at productivity in the public sector within the UK, it basically hasn't improved one iota since the year 2000, despite the rise of tech, the internet, email, all these other advances that have really helped drive productivity within the private sector, no advance within the public sector whatsoever. And of course, last year, the government brought in big pay rises for public sector employees without them linking it whatsoever with productivity. So you really need to drive on the spending side of things, cut spending, then you can cut tax.
Do you think our political systems are democracies these days, especially given how much, I think it's probably fair to say, sort of how fragile so many of our democratic institutions are, how much faith has been lost in our democratic institutions? Do you think they're really equipped to make these pretty difficult trade-off decisions? I mean, everybody likes to see tax cuts. We've just done it here in the US, another big tax cut or a continuation of the tax cuts from Donald Trump's first term. Some restraint in spending. It's true, a little bit of spending restraint in some areas, in particular in a little bit of restraint in some of the healthcare spending areas. We've got Britain. Britain is going through process right now. There's going to be a budget next week, which is for American viewers and listeners, is the annual essentially setting of sort of the fiscal policy for the next year that the Chancellor of the Exchequer, the equivalent of the Treasury Secretary, does. The current British Chancellor of the Exchequer has got a huge fiscal hole to fill. They're probably going to make some cuts, but more importantly, they're also going to raise taxes. I just wonder whether governments have the political authority and legitimacy to make these really difficult decisions. Again, as saying the UK's case, raising taxes, which is going to be very unpopular and very difficult. In America's case, cutting spending, which clearly needs to be done. No one seems to be getting to grips with that. And I wonder whether that is a fundamental problem in a political system where governments feel they just need to do the popular thing rather than the right thing.
That's a great question. The subtitle of the book is Boosting Living Standards in an Age of AI and Autocracy. And the reason to talk about autocracy is because there's sort of theory out there that basically you can only really do these sort of free enterprise, free market measures if you have more of an autocratic system. And one of the interviewees for the book, a former foreign secretary, actually talked about how the Chinese government actually sort of almost laugh at the Western countries, saying that all of these countries with their democracies, and of course the public wanting ever higher spending and driving up welfare bills, that sort of thing, they will never be able to shape up and actually get into economic growth and get into shape for that. I'm actually more optimistic than that. I'm not underestimating the dire hole that the UK and Western European economies are in. But actually, I think there is a way through with political will. And if you spoke to some of the perhaps more sort of successful British prime ministers of recent years, we spoke to 5 former PMs, the likes of Tony Blair and David Cameron, they said that one of the key things from their perspective was coming in with a plan for actually how you're going to deal with the economy, and then be ruthless in terms of making economic growth the number one priority for the government, and everything else actually points into that. And the current government in the UK came in with that plan. It's talked about having the wealth creation as the number one priority and making economic growth the number one priority. It hasn't done that in office. It's done things in a very piecemeal way. So you really need to actually prioritise economic growth to actually really drive it through within a democracy.
Since we're talking about the UK, and you're talking again, you're laying out this case for a supply side approach. Let me take you back to 3 years ago, the fall of 2022, yes. when again, my American readers and listeners will be, I think, generally familiar with the Liz Truss, the 49 days of Liz Truss, who was Conservative Prime Minister at the time. She, shortest serving Prime Minister of all time in Britain's 270 years or whatever it is of Prime Ministers. She tried to do more or less, I think, some of the things you're proposing, big tax cuts. Didn't really, go for growth. We need growth. Prosperity can only be achieved through growth. Growth can only be achieved by sort of unleashing the animal spirits of capitalism. We've got to cut taxes. Cut taxes. Don't worry too much about the deficit. There was again, now there's different narratives here. People argue different things. Liz Truss herself says she was sort of, brought down by a kind of cabal of the central bank, the Bank of England, and, and evil traders in the City of London. There's a view that it was, and there's an alternative view that it was just an incredibly bad time and very irresponsible to do it. But the point is that this approach was tried, spectacularly failed, led to Liz Truss having to resign and be replaced by Rishi Sunak, who, then instituted a much more, shall we say, a much less supply side based approach. Taxes did not get cut as much, and we ended up with, in fact, the tax take continued to rise. Was that a lesson here? Was that a lesson in in the failure of this attempt and how difficult it actually is to achieve this sort of supply side led growth?
I think it's a lesson in there in the politics of it. You need to think about the politics of a growth plan, and you need to actually outline it all at once and actually implement it with some pitch rolling ahead of time. I think one of the problems with what happened with Liz, you rightly mentioned what happened with the Bank of England and the LDIs, and that was a crucial part of her downfall. But also she announced a very big energy package, because of course energy prices were hugely high at the time. So big spending package on energy, then a tax package right after the Queen died, so people were just sort of tuning into the new Liz Truss premiership. So it seemed to be a big spending, big tax cuts, without balancing it all out. Now, in fact, behind the scenes, she had an idea of how she'd cut spending as well. But because she didn't announce it all at once, I think it caused that market turmoil. So I think the key lesson, looking forward to the future, is basically to work out that whole plan, as you say at the beginning. Look at the whole 5 kingdoms, get them all aligned, announce that plan to commentators, the markets, the public, to Parliament, about what your overall plan is, and perhaps phase it in over time in different ways, as we suggest in the book, but get the politics of it right and not try and sort of bring it in one sort of big bang without any explanation.
All right, let's move on to the next of the 5 kingdoms, which is sound money.
Yes.
Again, an absolute staple, one would think, of sort of conservative economic thinking. Yet it, we sort of all agree on the importance of, preserving the value of the currency and sort of prudent monetary policy. I mean, here in the United States, and again, not necessarily asking you to comment on the president's ongoing battle with the Federal Reserve about whether or not the Fed should be cutting interest rates. We still have inflation, though, here in the US at a level that's too high for the Fed by its own targets. You have inflation in Europe, in the UK particularly, which is also still a little bit too high. Bank of England maybe, cut a little bit, maybe cut further. How do you assess the confidence, the public confidence in the willingness and the ability of central banks to do the job of maintaining sound money?
Well, it's very true that within the UK, the Bank of England hasn't been good at keeping inflation at the 2% level. It's been above that. But one thing which politicians of all the parties we spoke to, and almost all politicians I can think of in the UK, apart from perhaps Liz Truss, actually think the Bank of England should be independent. That was one of the best things that Gordon Brown did. And indeed, speaking to some of the older chancellors like Ken Clarke, he was saying that he wished he'd done that when he was chancellor. So I think it's one of those things where it is a sort of no-go zone. It must stay independent. But that said, if you look at the spending within the UK in recent years, one of the key drivers of the high inflation has been massively increased government spending, helped by a lot of quantitative easing in recent years, which was allowed by the Bank of England. So, yes, I think we need to be tougher, perhaps, in terms of the Bank of England and their mandate, and perhaps actually reorientate the mandate somewhat towards actually having growth as a component of that, and actually encourage them to think about growing the economy as well.
All right, for the 4th kingdom is regulation. Now, this is one area where I think the populists, shall we say, who seem to be, if not in the ascendant, then certainly have been rising in kind of right of center economic thinking over the last few years. It's where they do, I think, to some extent, challenge some of the supply side orthodoxy. We have, here in the United States, we have a government that is much more interventionist than I think, say, Arthur Laffer or Ronald Reagan would have liked. Whether it is, it's not clear whether exactly what approach Donald Trump really favors towards regulation of the big tech firms, but it was his government, after all, that first took the effort to try and break up some of the big tech firms back in his first term. You have people like J.D. Vance, who's the vice president, a strong contender to be the presidential nominee next time around, who seems to be very much in favor and has a very much more aggressive regulatory approach, saying that we need to protect American workers, but workers need to be protected sometimes from some of the predatory behavior of capitalists. We've seen this administration doing things like taking stakes in companies, whether it be some tech companies, steel, various things like that. This seems to be something that is, in that conservative economic orthodoxy, is very much, at least under challenge or even in retreat. How do you? Is it still? Is there still a case for a sort of purist approach towards a hands-off regulatory government strategy?
I think there definitely is, and this is a key driver for growth. And if I was to point to 2 areas where we actually need to really look at things, and this applies actually right across European economies, one is definitely planning. We need to be building more, and there's so many planning restrictions now within the UK, and so much NIMBYism and opposition to local building. That's really being held back. We all know that if you allow builders to build, that can be a great driver for growth, and actually a great driver for getting people into work as well, which is also an important thing to think about. The other key point is energy. Energy prices, electricity prices in the UK are 4 times more than they are in America. And that's really holding back all sorts of companies, not just sort of perhaps some of the older companies people think of, but think about data centers. If you want to be ahead in AI and tech and data in the UK, we need cheap electricity. So we need to think about how we redo that. So the regulation around planning and infrastructure and around energy are crucial components of growth, and of course employment as well. One of the things we're doing in the UK, which is really going against growth and jobs, is bringing in more and more regulations when it comes to employment, making it more difficult to employ people, re-empowering the trade unions, all the great changes that happened in the 1980s under Margaret Thatcher. They're being rolled back at the moment, and this is happening in other European countries too. And the more difficult you make it to employ people by having more workers' rights, more regulation, and more expensive in terms of employing people, the fewer jobs you'll have. So again, we need to really think about how we regulate employment.
All right. The fifth kingdom is trade.
Yes.
And I think it's fair to say this is the one that is most under siege from current political phenomena. Again, it's core part of economic orthodoxy that free trade is beneficial to an economy. It's good for consumers. It's good for productivity. It does all those things that, for a very long time, everybody sort of seemed to agree on. That's gone, right? We've had Brexit in the UK, which has imposed, quite significant trade restrictions on Britain's trading relationships with its most important economic trading partners. Donald Trump here in the United States, in his first term, raised tariffs on some countries and some products. Second term, went the whole hog and imposed tariffs on every single country in the world, including some countries that the United States doesn't even trade with. Absolutely wedded to the idea of tariffs, to restrictions on trade, this belief that actually trade, protectionism of some sort, tariffs protect domestic industries, help manufacturing in particular. Manufacturing has been declining in the US and the UK over a long period of time.
Yeah.
That principle, that economic kingdom, that pillar of supply side economics has been blown up, hasn't it?
Well, it has come under attack globally in the conservative circles, but actually in the UK, we're doing pretty well on this. We've got our trade deal with the EU now, so we actually trade with them. Actually, trade levels with the EU, we're trading more than we were in 2019 with the EU, and more globally than we were in 2019. So actually, trade is up for the UK, which is a great thing. And of course, the UK has been able to get some great trade deals across the world with Australia, New Zealand, the Gulf states were a recent one, India's a recent one. And of course, when Donald Trump did his great trade liberation day, and all the countries are sort of circling around trying to get trade deals with the US, the UK has got a better trade deal with the US now than the EU has. So actually, Brexit's been a benefit to the UK in that respect, having the flexibility to be able to get these trade deals. So if there's one glimmer of hope in the UK economy, it's the fact that most of the political parties, including the Conservatives and Labour Party, seem to be wedded to the idea of free trade and be pushing for more free trade, which is good for both consumers and the UK economy overall.
All right, briefly, Matthew, just as we close, we've talked about the if you like, the prospectus, the prescription for what the UK economy and more broadly the economy needs more broadly, and based on these principles of supply side economics. Let's talk about the immediate past performance. The UK, and I ask you this, you were very much involved in the Leave campaign,
Yeah.
the campaign to leave the European Union. Looked at from a distance, the UK's economic performance since Brexit looks pretty awful. Subpar growth, flat productivity, real living standards going nowhere. Looks like vast majority of British people now would vote differently than they did in 2016. They'd vote to stay in the European Union. Europeans like to sort of look at the UK and hold up the UK as an example of why you should never, ever leave the European Union. It's been such a disaster. Seen various studies. There was a study just by the National Bureau of Economic Research here last week that suggested that Britain's GDP is 6% lower, I think, than it would have been if it hadn't been for Brexit. Was Brexit a terrible self-inflicted wound?
Not at all. In fact, I actually think that it'll be our saviour. We could have done much more with it in terms of the powers we have from Brexit. Now we've taken back control in terms of deregulating certain areas of the economy, but we've grown faster than other Western European countries since Brexit had done better than them. I think the uncertainty around the Brexit deal didn't help, but there are wider issues as well, issues of productivity overall in the public sector, issues when it came to high energy prices, thanks to the net zero policies, thanks to the Russia-Ukraine war. Wider issues in terms of post-financial crisis, the growth of the state, high taxes, high spending, all sorts of issues have led to that amalgam of basically low growth within the UK. It's not just down to Brexit by any means, but actually Brexit could be our salvation. Now we're independent. If we use those powers right in terms of being that sort of supply side free market hub on the edge of Europe, we can actually really go for growth in a big way.
Again, that's a set of sort of wishes and hopes, as it were. The actual economic performance, I mean, how much of the relatively poor economic performance in Britain in the last 5 to 10 years do you attribute to Brexit? You say, there was uncertainty in that extraordinary period for 2 or 3 years between after the referendum vote and the actual final implementation of Brexit. But how much of if you do create friction in trade between yourself and your major trading partner, isn't it just inevitable that will have an impact on growth and prosperity in your country? And maybe that's fun. Maybe that's what the British people voted for. Look, okay, we just accept we want to take back control. We want power over our own. We don't believe in supranational bodies like the EU telling us what to do. But the flip side of that is that we put up barriers. We put up barriers to immigration. We put up barriers to trade. We put up barriers to capital flows. And we're just going to have to accept the economic consequences. Isn't that ultimately the trade-off?
Well, I'll let the interviewees who we interviewed answer this question, because we interviewed about 30 people, economic decision makers, 5 former prime ministers, 9 former chancellors, senior business leaders like Jamie Dimon and Richard Noddy from Goldman Sachs, and a whole host of people like Rupert Soames, head of the CBI, the main business group within the UK. So we've got their opinions on this. And being more establishment figures than perhaps I am, a lot of them were on the Remain side when it came to the referendum 9-10 years ago. And we asked them, what did they put down to the low growth in the UK? And actually, how did they prioritise these different things I talked about? And actually, all of them said that the Brexit period, they felt it was a hit to the UK economy, but they felt there was a bigger picture there. And the bigger picture was basically the UK not prioritising economics and growth as centrally as it did in the 1980s and 1990s. So it's that bigger picture there. So we're out of the EU now. You mentioned that people would perhaps want to rejoin. That's not the case. If you look at the polling now, some people perhaps regret voting to leave. They actually say they're happy being outside the EU now, wouldn't vote to rejoin. So that's really off the table now as a question. And all those stats you talk about in terms of how the UK economy is supposedly sort of smaller than it would have been, they're based on some quite old studies now of the UK economy from the sort of referendum period. So they have been updated for quite some time. So I'm optimistic about the future if we have a leadership then in there who actually prioritise growth as the number one thing. We have the powers now within the UK. We've taken back control. We have those economic levers. We just need the politicians in place who want to make those decisions.
Matthew Elliott, Lord Elliott of Micklefell, member of the House of Lords, author of this new book, Prosperity Through Growth, co-author, I should say. Thanks very much indeed for joining Free Expression.
Thank you.
Well, that's it for this week's episode of Free Expression. Thanks again for joining us. I'll be back again next week with another episode. But in the meantime, have a great week and goodbye.